Today, I want to talk about one of my favorite subjects, risk management. So if you've ever blown an account before, drop a 777 in the chat. If you've ever blown a Forex account. And what I mean by blown an account, meaning let's say you deposit $100 and you were trading and you lost several trades or maybe even one trade and you got down to less than $25, right? So you pretty much got down to little to nothing to where you barely can open up a trade, if any. Drop a 777 in the chat if you've ever did that before. I'll put a couple extra sevens because I've done it before. It was so bad for me that I had to take a couple of weeks off from trading. I needed a breather. And the reason why I had to do so is because I didn't understand a very important factor when it comes to being a trader. There's a couple of things that you need to have tied down in order to have a lasting time in the Forex or trading market of any type, to be honest. I use a triangle to visualize what I'm trying to get across to you guys. In the middle, you have what everybody that's trading is trying to get it to, right? It's the dollars, right? We want to be profitable, right? We want profit. This is what everybody in the trading game is getting into the game for. We didn't get into the game just to say we're traders. We want to make that money, right? But there's three very important things that you need in order to be an effective trader, right? And you cannot, I repeat, you cannot be an effective trader without all three of these. Now, you can have all three of these and some other things on top of that, but if you don't have these three things, you're probably going to have some trouble. So first and foremost, risk, aka risk management or capital management, however you want to word it, right? So, but when it comes to risk, it's very important to know that whenever you get into a trade, anytime, whatever that trade may be, you got to have a set risk parameter, right? Are you going to be risking 1% of your account, 0.5%? Is it a specific dollar amount? That's fine too. If you're a person that doesn't care for percentages, you just want to say, okay, I want to risk, $25 per trade and look to make 50 or 100 or whatever that number is, then cool. But the point is you need to have some type of risk profile to where you're saying, okay, this is what I'm going to risk for every trade. So that way you can have consistency, right? Because if you risk $25 here, $75 there, $100 here, you're going to have a situation where your equity curve is going to be going in the wrong direction, right? You want it to be a bullish trending equity curve, right? Where you're making higher highs and higher lows on your account balance, right? You don't want to have a negative or a downtrending equity balance curve, right? Where your price is making lower lows and lower highs, aka your account balance. But when it comes to risk management, guys, you got to have that in your game. If you don't have risk management, if you are getting into trades and you don't know how much it's going to cost if that stop loss gets hit, if you have no clue or you guesstimating, you're gambling with your money, man. You're really risking it. So definitely make sure you have risk. Next, goes without saying, strategy / your rules to trading, right? So when I say rules of trading, aka strategy, I'm talking about having a trading technique or strategy, right? So like for me, I enjoy the Fibonacci retracements. I'm looking for those impulses in the market, waiting for the retracements. And I'm looking to enter to catch the continuation to the higher side, right? That's a strategy, right? And also have rules to trading that strategy, right? The price has to come back and get to at least a 50% or 61.8% retracement level before I can enter the trade. And then on top of that, I want to see some type of, reversal candlestick pattern print there, whether it be a long tail wick, aka a hammer candle, or a doji candle followed by a bullish engulfing, right? So I have rules to that, right? I don't just have a strategy that says, oh, well, if it's Tuesday, I'm looking for just red candles and then I'm going to sell, and it's Thursday, so it's green candles, so I'm going to buy, right? I've heard some crazy strategies out there, man. But none of them are rules, have rules to them. And you got to have a set of rules, and you have to know all this before you get into the trade. Because depending on the situation, when you get into the trade, it may be too late to figure out the strategy at that point, right? Depending on what time frame you're trading and all that good stuff, right? But you definitely want to have a strategy. And with that strategy, again, you want to have rules for every aspect of trading. What's your rules for the risk, your stop loss? You know, where are you going to put your stop loss? Is it going to be a certain price point? Is it going to be a certain amount of pips below a certain price point on the market, as opposed to, you know, when it comes to market structure? Is it going to be a certain fib level? I don't know, right? But the point is, you have it already mapped out and understood before you even take a trade, right? This is all part of the planning process before you even hit the button to buy or sell or to place an order, a pending order, right? You got to have a strategy, right? And then the last thing is going to be diligence, all right? AKA consistency, right? So when I say diligence and consistency, I'm saying the diligence as far as going in and doing the back testing and doing the leg work and doing the demo trading, right? That's what I mean by diligence. Sometimes traders are just too anxious to hit that buy and sell button and to see them blue numbers when you're making profits, right? We all know when that MT4 screen turns red on your phone, that means that you're in negative territory. You're losing money at that point, right? But the diligence that goes with the back testing, right? So yeah, you got a strategy, you got your rules laid out for how you're going to look for trades, how you're going to enter setups, how you're going to exit setups, where you're looking to take profits or take partials or whatever, right? You got all that written out. Well, now it's time to go and do the diligence and work on the consistency by going and back testing that or forward testing, right? What I mean by that, back testing meaning going and looking at past price history and utilizing that and looking for your setups. And once your rules for trading are met, you would, mark it up like you was going to take that trade and then see how it would have played out. And if it would have won or lost, and then, track that data over the span of at least 100 examples, I would say. Some people tell you 50, some people say less than that. But if you're going to be serious about trading 100, looking for 100 shouldn't be hard, right? If you don't want to put in the time and energy and effort to go and find 100 examples of your strategy / trading style / technique or whatever, then you're not really serious about trading, man. Because at the end of the day, if it take you 3 weeks to do that, it's worth it, because it's gonna give you the confidence in the strategy, aka the rules of your trading, right? Because you've seen it 100 times and you saw that 75% of the time I make money on this particular strategy / setup, right? So when it comes time to take that trade, you're not going to be scared or nervous about the outcome. And also, when you take the trade and it don't work out, you won't be on suicide watch, because you know that 30 out of the 100, you're going to lose, and 70 out of the 100, you're going to win. And this is just one of the 30. Even if they come back to back to back, it's going to happen. They're going to have a losing streak in trading. I guarantee it. Diligence, very important, guys. You got to do that homework. You got to do that back testing, right? Imagine if, we come to this call and we say, okay, well, I need you to go find 100 setups and send them to me, right? How long would that take you to do that, right? And what would be your feelings around that? Would you think that that's a waste of time? Why do I have to do that? I need to make money now. If you had those kind of thoughts running through your head when I mentioned these things, then you got to really question your focus, right? Because that should be, hey, that's easy, right? Because again, you're practicing, right? You're going through the process of trading without actually trading and seeing the moves without, actually trading the moves. And so therefore, again, it's going to prepare you for that time that when you get ready to actually take the test, right? So that's back testing, right? But when I talk about forward testing, guys, it just means demo trading, right? So again, that's going doing the diligence, right? And being, working on the consistency, right? But those three things, you have to have all three of those, in my opinion, to be a successful trader. If you don't have the risk, you're going to blow accounts. You may win some money, you may get real hot and have a winning streak, but eventually you're going to blow it all. I've seen it too many times. A young man took a $200 account, grew it up to about $20,000 and lost it all. That goes back to this one right here. Yeah, you had a little hot streak. You took 200 to a couple thousand. So you maybe you're feeling yourself and you're thinking that you are the exception. You the Michael Jordan of trading. But then that market really quickly humbles you. It brings you back down to earth, because that trade eventually is going to derail. It always does. With that being said, again, guys, these three things are very, very important. Strategies, rules, when it comes to your trading, having a risk management plan, again, knowing when I talk about risk, that means if you guys don't know this right here, the risk versus the reward, right? You got to know what that is for your trading plan, right? I'm gonna show you all this when I go over to the regular screen, but risk and reward is very key because it can take a trader who loses more trades than he wins and make him a profitable trader. Can y'all believe that? That means I can have you take 40 trades. I'm sorry, I'm gonna say 20 trades and lose. I'm gonna repeat, lose 12 of those 20 trades. So you lost 12 and you won 8, but you can still make money and be a profitable trader if you have that risk to reward part of the risk leg of that triangle on point, right? That's why if you guys ever hear me when I'm talking about targets, I want at least a 1 to 2. Reason being, every win erases 2 losses, right? Every win erases 2 losses. That's why I love that particular risk reward. Now, you've seen some traders may have a situation where they have a 1 to 7 risk reward ratio, right? That's okay. That's cool. But I'm gonna tell you this, guys. The higher up you go on that risk reward number, you're probably gonna have more losses than winners, if that makes sense. So like if I go for 1 to 2 risk reward, I'm probably gonna cash out that 1 to 2 more times often than I am if I go for 1 to 10, because sometimes it's not gonna quite go 10. Right. And if all you do is you're waiting for it to go to 10 times your risk and you're gonna let it run, it may go all the way up 7 times your risk and then go all the way back to your stop loss or to your regular entry, right? But it's okay to target those higher numbers, but have like a minimum that you're looking for in the setup. Like you can really look at a setup and say, okay, if it goes the way I'm expected to go, I can reasonably see it going 2 times my risk. So hey, I'm gonna take this trade. But if you can't see it going 2 times your risk, meaning if market structure doesn't support that, like if there's a floor sitting right next to that sale that you're getting ready to get in, that's gonna keep you from getting to 2 times your risk, then you pass on that trade and wait for another setup, right? That goes back to that diligence part. Because if you're diligent, you understand that, okay, I don't have to take every single setup that I see. Because guess what? There'll be more setups that present itself. I promise you. I promise you. So with that being said, let me show y'all this as far as risk reward goes, right? Okay, if you guys have made this far, do me a favor, go ahead and hit that like button for me. And we're going to go ahead and break this video up into 2 sections. So it's going to be a part 2. Check the description below for the video. I will post the link below in the description. Also, go ahead and subscribe so that way when I post the second video, you'll be notified. And thank you guys for checking out my video. See you next time.